afternoon review of the market. Today was really interesting day in terms of market. IT companies was selling off, and only bank, financial sector, and energy sector was up. And I want to talk a little bit more about why is this happening. Right? It's a little bit big picture, but as an intraday trader, you have to realize from big picture perspective into intraday execution plan, right? So let's have a look for first. Before market open, I post a picture and asking my members in the room on Discord chat, why market is selling off. Market Qs and IWM, which is ETF index, selling off in the red numbers. Tech companies, Facebook, Apple, Microsoft, Tesla, Uber, Lyft, whatever tech stocks was selling off quite heavily in the morning. And energy indicator, financial indicators, JP Morgan, Exxon, Bank of BAC, Goldman Sachs, basically financials and energy are in green. Okay, let's have a look in the end of the day. So same situation. Hold on. Market a little bit in the green number, but the Q as a tech index still red. Couple tech companies making in the green like Apple, Lyft, but the Qcom, Square, Uber, DKNG, NIO, all companies are in red. It's a tech companies and financial and banks. Banks and energy companies are still in green even after the whole day. Let's have a look on the market. Let's have a look on the chart. What's going on? So daily chart. Daily chart. We open with the gap down market SPY. Okay, it was a huge gap down. Let's have a look on Q. Q had much more higher gap down and selling pressure. IWM as well, gap down. Okay. So what we have to do, we have to realize a big picture. What's going on? Why tech stocks selling off? We have a look on the Apple. It basically made it up, but it opens with a huge gap down. AMD as well. You see this wick, so huge. Okay. So let's have a look and let's realize the big picture. What is the big picture? The big picture is in the last decades, the banks, angel investors, and financial were providing very cheap money, literally cheap money. We were witnessed like you can borrow money from bank for negative rates, and basically those investors, where they were putting all this money. Of course, they were putting in the money like IT sector, tech companies. For example, Tesla. Tesla PE ratio is over 1,100. Okay, so it's overvaluated. So it leads into the some kind of IT boom and some kind of very positive increase of the value all tech and IT's company, okay, in the last decades. But what's going on currently on the market? In America, we start talking about increasing interest rates. So what does it mean? Increasing interest rates, basically government and banks asking for money needs to be paid back. So what does it mean for the market? Of course, market is selling off because the investors start taking their money back. Okay. What does it mean for tech stocks? Tech stocks selling off as well. What does it mean for banks? Banks are green. Okay, because basically the who is going to profitable from increasing interest rates. Of course, banks and energy sectors, and energy sector likes increasing interest rates as well. However, the companies like Uber, Tesla, Lyft, all these companies running the years without making any profit. So how does it possible? Because they are independent. Uh, I mean, they're depending on the money from investors, right? So um, relatively in intraday trading, what you have to realize, like a big picture, what's going on at in the world right now. Okay, so technically on the market we are still in the uptrend, but we slowly breaking that uptrend. So you have to even realize in an intraday trading, like what's going on. If we open like a lower time frame, so what we could witness today after market open, many retail investors and traders basically what they seen when they open morning platform, they seen a huge gap down. Okay, the huge gap down on a daily chart, on 15-minute charts, on 5-minute charts, every single time frame was selling, and every single time frame was telling you we are gapping down, so it will be like a sell off. Okay, what the institutional traders was seeing today, and professional and institutional traders seeing like, all right, gapping down. Gapping down is mostly common for knowing like we are buying back the gap down. So they're technically saying we are still in the uptrend, we are just gapping down. Fine. So from the opening, when the market opens, that was basically like a panic selling from all the retail investors, traders, and non-professional traders, because obviously they are seeing like we are gapping down, right? So what the professionals were doing, when we have a look back into my morning game plan and market review. Uh, if you're looking to participate to short side, be careful with stocks which are too extended on downsides as market. Sorry. Uh, oops, where I'm. All right, here we go. So be careful with stocks which are too extended on downside, as market could bounce up until lunchtime, as we could see in that last three trading sessions, last trading days, right? So let's have a look what the market does. The panic selling from the opening, because gap down. All non-professional traders and investors saying gapping down. Psychologically, everyone is scared. So panic selling. Then the panic selling, it's basically sometimes it's 30 minutes, sometimes it's 15 minutes. In this case, it's exactly 15 minutes. Once the panic selling is gone, the professional traders and investors stepping up in the charts in the market and start buying back the shares, buying back the market. Okay, and that's exactly what we could see in, today. For example, UCAM. Okay, a little bit panic selling, then bought up. NIO. Have a look. Panic selling. I was involved in the panic selling as well, making profit something like 250 profit. Okay, because I just love being involved in a short position when there is psychologically huge, a massive panic on the market, because the people only seeing the market is gapping down, and they are not really able to realize the big picture, okay, of the market, which the market big picture of the market is basically we are still holding the uptrend. All right, but let's have a look on the NIO. Panic selling, you can definitely get involved in the panic selling. Of course, there is nothing wrong about that. All right. You just have to execute your trades very, very quickly. Get in, get out. Okay, because the panic selling is very, very fast. So you don't want to build your intraday downtrend positions in this case, right? Because we are still in the long in the uptrend market. So NIO ended up with the panic selling after 15 minutes and then all the way back up. AMD, the same. Panic selling from the opening all the way to previous close. All right. Apple as well, panic selling. I get involved a little bit in the panic selling as well. But look what's happened. It's already breaking the previous close. Okay. Let's have a look on the banks. JP Morgan. All right. Whole day staying above previous close price. And it's basically the whole day was a green day for banks. Bank of America as well. Let's have a look on energy stocks. EP, little bit panic selling, but again, brought up over the previous close, holding above the Viva, right? XOM as well. Panic selling involved in the market, I mean, with the market, and then all the way back. It just, do you see the difference between tech stocks and the energy and financial stocks? The energy and financial stocks brought up much more faster and much more uh, mm, aggressive than, for example, tech stocks. Apple, it took all the way down to going to previous close price, right? As some, for example, it was much more faster, right? So let's have a look on Qs, Nasdaq market. Mm, it's already touching the previous close price, which is fine. Let's have a look on, for example, Tesla. Okay, again, the panic selling and then going all the way up because we are still the big picture. The big picture, what's telling you we are still in holding the uptrend, right? So yeah, that was like a little bit about what's going on the market today. Why all these stocks and market was selling off today, why the financial and energy was in the green number, and basically it all comes to big pictures, being able to recognize what's going on with the big picture. In the future, what we can expect in the future? Well, when the banks increase interest rates, what does it mean for investors? It means the money will not be able to, will not able to get the money from bank for very, very low interest rates. Okay, so investors really realizing like, all right, should I make that investment or not? It's not really necessary. I will not make it. Okay, so all these companies is really questioned in the future how they are going to run their businesses because so far Uber, Lyft, Tesla, they are not making any profits. Okay, but for example, company like Apple, they are able to make a profit. They are able to gain some money from selling their products. So it's a little bit. You have to split the tech stocks between like in the two groups. The first group, tech stocks, startups who are not able to make any money, and the second group, Apple, Facebook, Amazon, the tech stocks who are able to make their own money. Okay, and that's a little bit different. For example, Uber, uh, still green. He's still in the uptrend. 100% agree. But the question is how they are going to run their businesses if they are really in dependent on investors' money. Okay, because the bank will not be able to lend the money for to borrow money to investors for at least not that lower interest rates. Okay, What is what does it mean for that company? Um, it means like investors start taking their profits, and that's why I'm really like mm, I'm not saying I'm like negative about that companies, and not saying that companies will go to bankruptcy. I'm just like, there is a huge question in the air, like how their company will be continue to running their businesses if investors start taking their money. Investors are only the people who earn money uh, from a companies, right? So those money will be needed in the future to running their businesses, and if they will not really um, realize how they are going to make money, it will be very very difficult for them run the business. Okay, so that's a little bit topic about like how to get the big picture in intraday trading. uh, it is very important, realizing the big picture from the market. Even if you are like intraday trader, it is definitely, it is important. What is more important is like having the view of the market not as a retail investors or a trader, but as a professional and institutional uh, trader or investors. What is something a little bit more difficult even to explain to someone who, for example, never had a chance to work in any institutional trading floor or any like investment bank or trading banks, whatever. Okay, because what the retail was seeing today just purely gap down. Does mean okay, we are going in a short position. Fine, absolutely. There's nothing wrong if you get involved in a short position and take your profit, but you have to be quickly get in, get out. All right, and all this panic selling, it takes maximum like 30 minutes for a day. Okay, depends how extended it will be in from the beginning, right? But what's going to happen when the professional traders and professional institutional investors and trading traders stepping in the market? Of course, they want to bring the market up in the green numbers, and this is what's basically happening today. Okay, it's been like third day when the market was gapping down, and we taking the market all the way back to above previous close price, right? So realizing the big picture, and being able to review the market as a professional trader, not as an individual trader, because you are never alone on the market. There are so many professional traders as well. Okay.